Hello, and welcome to the Trading with Ashley show. I'm so happy to bring this show to you tonight because I know that a lot of traders are nervous because everything is so great in the market and they are sitting on piles of cash and full portfolios that are showing green, green, green. And that's very happy and very exciting. But everyone keeps asking, so when are we going to see that drastic pullback? When are we going to lose everything we worked so hard to build over the last year? And so I thought I would spend a little bit of time talking about that because, quite frankly, fear is what keeps most people out of the market. And if you had let fear rule you over the past 2 years, the gains that you would have missed out on, maybe you did miss out on the gains. And so I want to kind of give you a little bit of perspective and how to look at this. Well, for one, if you're selling options, it really works out well for you if you're sitting on some cash and the market does pull back because it gives you some great entries. You can sell puts, cash secured puts, when the market pulls back. And because the market's pulling back, people are going to buy the puts that you're selling and they will gladly pay you top dollar for them if you are an option seller. And so that works in your favor when the market pulls back, as long as you do have some cash sitting on the sidelines. So usually your goal is, when things are riding high, is to go ahead and take some chips off the table, push them to the side, and wait for the eventual pullback so that you can get some incredible pricing on some of your favorite stocks. So that's what we're going to talk about today. I am going to take you into the Fear and Greed Index. We're going to take a quick peek at that. It's something that I personally use to help determine how toppy we might be in the market or if it's time to actually go shopping. So let's go take a quick look at that. When we're looking at the Fear and Greed Index, you can find this by going to just do a basic Google search and put in fear and greed, and it's going to pull up this particular website, the CNN Fear and Greed. But here's what you want to look at. Right now, we are showing to be in a neutral state, which that's fine. As long as we're in neutral, I'm usually pretty comfortable keeping my money in the market. But once we get here, you see here to extreme greed, if we start getting close to 80, that's when I start taking some chips off the table and cashing up for the next opportunity on a market pullback. That's typically a good indicator right there. Now, when do we actually buy stocks? Well, if you see it go down to extreme fear, that's when there's the proverbial blood in the streets, and that's the best time to buy stocks, where you're getting them at bargain basement prices and you can enjoy the eventual ride up. So let's go listen to one of my good friends, and he's going to share his perspective on the market that takes it a little bit further for you. All right, everyone. I have friends in high places that know what they're talking about when it comes to the overall market. And they don't just use a gut feel or check that fear and greed index like I like to do. They actually study the charts and use technicals. So I've invited my friend, Stocks with Josh, onto the show because I want him to give you a quick rundown of what we can be looking for in the SPY, and so we can better understand when we need to start cashing up on our positions. And so with that, I'm going to turn it over to my friend Josh and let him take you through some technicals that I know will help you as you're getting ready for the weeks and months ahead.
Well, thank you, Ashley, for the introduction. I am a fan of the show. Thank you for having me on today. And yes, I think I have some clear direction that I can give everybody regarding the SPY and what we're watching for specifically this week that we need to achieve so that we know what to expect going into the end of the year. The biggest data point that we received was the CPI. We're going to get the PPI as well, and that is going to be taken by institutions and interpreted as to whether or not this is a safe to invest risk on environment. And based on the CPI response, it appears already that they considered it a bullish read. Now, if we go into the SPY, we've been battling against the 608 area of resistance. Matter of fact, we have been repeatedly hitting it. And I like to give the analogy of a SWAT team knocking on a door, that the more times it repeatedly hits that door, the more likely the door is going to come off the hinges and the SWAT team is going to go pushing right through. And so the fact is, we've actually hit up against 608 3 times. All 3 times we got rejected, and 2 other times we came up and barely kissed it. Let me just take you into the chart and show you, and then I'm going to make a couple really important points about it that will give us direction in the days ahead. So here we are, 608. Now, this is the general range that we're in. largely we have been consolidating between 608 and 60, we'll say 608 and 602. Now, this is really good news. We actually don't want to shoot right through it. If we go back in time and we look at this candle when it gapped up, if we gapped up again, it would make a very weak path to these higher time frames. And it would mean that when the market got some bad news, it's sort of the old analogy, the higher it goes, the faster it goes up, the faster it can come down. So we're doing something that's normal and natural for Wall Street, which is to consolidate and build a base, right? And so far, in truth, we've had 1, 2, 3, 4, 5, 6 days largely consolidating in this area. Now, when do we know that it's time for the market to climb? Well, it's ultimately going to be when we open and close a candle above 608, which is clearly our defined area of resistance at the moment. And if we get that, we get a much bigger confirmation of a much bigger move going into the remainder of December that could initially cause us to hit 612 very easily. So it would look something like this. We would wake up one morning and the market would already be above 608. So then when the candle opens, it would be a candle opening above 608. And if we pushed right up to 612 and we closed the day above 608, this would be our confirmation candle that the run in 2024 isn't over. And my high target would be a move all the way up to 634. And that aligns with institutional analysis, as 9 of the top investment firms in the US have a target of 650 on the S&P 500. But on the other hand, let's look at from a more bearish perspective. Let's just say that at the end of the day, this thing is a steel wall, and market makers and participants can't push us through 608. Then there's a natural point at which we will fall back to, and it's going to be previous area of resistance, which at the moment somewhat coincides with the 20 EMA. That's the red line that you're seeing on the chart. And you can see that every time the market's needed to take a breath and pull back, oftentimes it comes back and interacts with the 20. Occasionally, like right here, we had a little bit of a scare, but it quickly recovered. And not only did it recover, it bounced hard. And so I'm not afraid of the market pulling back. We are in a lofty space. But here's the most encouraging thing that I can say to you and to those who are trying to make financial plans is, and this is so true, and it's something that I want you guys to just tuck away in your understanding of charts, and it's this. If price is above the 20 EMA, it is 100% in the hands of the bulls. We don't even have to doubt who's in charge of the market if the price is above the 20 EMA. And nobody should be freaking out or getting bearish until we get some confirmation candles under the 20. We're above the 20. The bulls are in charge of this market, and we're knocking and knocking and knocking on 608. And here's what I'm looking for my personal investments. Definitely going to go risk on if this weekly candle, so we're going to look at the weekly candles. I was looking at the daily candles a moment ago. If the weekly candle closes above that 608, so Friday we close above it, to me, that's the beginning of a confirmation of the move to 632. The next thing we need to see is we need to see a daily candle next week, Monday or Tuesday, open and stay above it, and then bam, I'm going risk on to the end of the year and believing that we are going to see a minimum of a 632, whereas a lot of big investment firms are actually still calling for 650. And one last point, thank you for giving me the time. These investment firms love to pretend like they called the market accurately at the beginning of the year. They all made predictions in January, but they allow themselves pretty much the opportunity to revise their adjustment all throughout the year, so that by the time we get to the end of the year, they say they've revised it numerous times, and then they say, hey, we called it correctly. But that's what surprises me, Ashley, is that we got to November and none of them adjusted down. So what does that tell you?
Yep, it tells me that there's a lot of money sitting on the sidelines, and they know it, and they know they're about to pour it into the market. Therefore, how dare them call it down when they know they're about to push it up?
I think that you're right about that.
Yeah. And just one more question for you. So that looks good through the end of the year and maybe even through January. But if we are wanting to go bargain hunting shopping, because everything's so lofty right now, but if we are wanting to establish some positions at a much lower price point, how much do we typically could we wait for and see a pullback to what level or what percentage?
Well,
And we would know, okay, now's the time to bargain shop.
Well, that's a great question. I'm going to answer it a couple ways. Now, a moment ago, we were looking at the SPY, and I gave you the target of the 20, which somewhat aligns with an area of support around 602 or 600 on the SPY. But let's assume for a moment that things don't go as bullishly over the course of the next week or two. We get a bad data point or something happens, and we get a breakdown and we drop beneath 600. True support after that is quite a bit down because of how strong the market's been running. I think we would likely pull back to 587. And I can tell you that I would love to see that because that would cause all of the big tech stocks to just come down a little bit more to have a little bit of a safer entry for positioning in 2025. And then let me be even more specific about the question you asked, which is how much of a percentage down do we sometimes get? If you go back, and I've done this many times and analyzed a bull run that we've been in previously, right now we've been in a bull run all of 2023 and 2024. Typically, before it concludes, we have two 6% corrections. Two. And if my memory serves me right, I don't I have to go back and check it, but I'll do that on another time. But the more common correction is around a 3% correction. So you can have up to four of those in an extended bull run. And we are at the moment, it wouldn't be unrealistic for us to get one. And I'm just going to quickly run an info line from where we're at back to, yeah. So interestingly, on that point, if we were to come back to my 587 target, and I didn't even run this before answering your question, that would give us an exact 3% correction. And it would be normal for us to get that, especially in December when folks have to reorganize their portfolio. Even if they remain bullish, us getting a 3% correction back to 587 would make a ton of sense.
That makes sense. And then, so everybody, you heard it here first. If you want to put together your shopping list and you want to know when you're going to get that slashed rock bottom price, at least this year, that will be your signal to go shopping on that particular moment when we see that pullback. So that's very helpful. And I think it gives all of us confidence to know when to strike. And hopefully you all have your money on the sidelines as well, at least enough to get you some really good stocks at some low prices.
Absolutely. I am. And I'm like a lot of people hoping that we don't get locked out through this Elon Trump election Santa Claus moment, that we get another buying opportunity. How rare is it that we pray for a pullback because the market's been strong and stocks look good going into 2025. And of course, things can always change. And that's why it's important to follow the charts. You can see that I'm not bullish for the sake of bullishness. I'm bullish when the charts are bullish, and I will turn bearish the day that we open and close a candle beneath the 20. Then I'm going to be waiting patiently for that pullback to 587 on the SPY.
Awesome. Thank you so much. We appreciate the help. And then if all of you want to enjoy his technicals on a regular basis, I'm sure most of you are subscribed, but if not, please subscribe to Stocks with Josh. You will look for those videos every day like I do, I promise.
Thank you so much, Ashley.
Thank you. For those of you that actually want to learn how to trade the wheel strategy in retirement, I will be announcing very soon a free webinar that I'm going to do for all of you. The way to make sure that you get notified of the time and the date of that webinar and for you to sign up, all you need to do is go in the link in my description of this video and make sure you sign up for my newsletter. I will be sending out communication through that newsletter, and you'll have plenty of time to sign up and attend that free webinar. Remember, if you're with Trading with Ashley, there is no trader left behind. Now, if you want to watch a video where I take you through the X's and O's of how to use leaps to trade the SPY, you can watch that video right here.